Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Thursday, the 7th of March in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, the UK Chancellor announces tax cuts for workers, but slow growth leaves little leeway for future giveaways.
The Office for Budget Responsibility says the UK is on track for a 4% Brexit hit to the economy.
And Wall Street gets a big win as Jerome Powell floats the idea of scrapping plans to raise capital requirements.
Let's start with a roundup of our top stories.
The UK's Chancellor has cut personal taxes for the second time in 4 months, spending £10 billion a year on reducing national insurance for millions of people. Here's what Jeremy Hunt says it will mean for workers.
April the 6th, employee national insurance will be cut by another 2p from 10% to 8%. And self-employed national insurance will be cut from 8% to 6%. It means an additional £450 a year for the average employee, or £350 for someone self-employed.
Despite Jeremy Hunt's talk of giveaways, head of Bloomberg Economics Stephanie Flanders says the Chancellor has taken a relatively cautious approach to tax cuts and even then may still not meet his own fiscal rules.
Even since 2010, the average headroom that a Chancellor has given themselves is 27 billion. So that shows how tight it is. I think they think there's going to be a 54% chance of them hitting it, which means he's sort of slightly more likely than not to be hitting his rule. And of course, at some level, the rule itself is a really silly one. It allows you to be raising debt every year. All you need to do is show in the distant, fifth year of the forecast that it's falling slightly. But then the next year, you push it forward a year, you never actually lower the debt. So, it's certainly something that frustrates me. He recited the pledges that the Prime Minister had made at the beginning of last year, and the Prime Minister routinely claims that they're bringing debt down, and it's not true. They have actually yet to reduce the debt.
Stephanie Flanders' analysis comes as the Office for Budget Responsibility said the government's borrowing costs would only need to rise by 0.3% for the Chancellor to run out of fiscal headroom. It comes as the UK is planning one of its biggest annual borrowing sprees on record, with the Debt Management Office planning to issue more than £265 billion worth of debt. While Hunt pleased some with his announcement of lower taxes, a British ISA and the end of the non-dom tax status, his own party colleagues were underwhelmed by a package that will only marginally improve household living standards, which are still lower than they were before the pandemic.
The Office of Budget Responsibility says that Brexit hit the UK economy is roughly what it forecast, despite the naysayers. The budget watchdog expects leaving the EU to reduce Britain's productivity by 4% and to show a 15% fall in trade. Bloomberg's James Wilcock has more.
The OBR has long been accused of being a Debbie Downer on Brexit, forecasting an economic hit. His business secretary, Kemi Badenoch, speaking to Bloomberg's UK Politics podcast way back in 2022.
Yes, I do dispute the OBR's forecast, because what happens with trade depends on the actions that I and my colleagues across governments take right now. The OBR is probably making a forecast based on how we used to do things. They don't know how we're going to be doing things.
But in spite of what politicians might say, the independent body says its negative scenario is unfolding as predicted. A long-term squeeze on economic potential and a fall in goods traded compared to other G7 countries. In London, James Wilcock, Bloomberg Radio.
In the United States, the chair of the Federal Reserve has signalled officials will scale back plans to make Wall Street banks hold more capital. Jerome Powell told US lawmakers it's possible the original government proposal could be completely reworked.
I do expect that there will be broad and material changes to the proposal. I'll add that I'm confident that the final product will be one that does have broad support both at the Fed and in the broader world. This would be a thoughtful, deliberative process. It's more important that we get this right than that we do it fast.
Federal Reserve Chair Jerome Powell speaking to the House Financial Services Committee. Industry groups have spent months lobbying against the changes. Powell and other senior Fed officials will need to vote on a final plan before the rules can be implemented.
New York Community Bank has raised more than $1 billion in equity. The capital injection was led by the former US Treasury Secretary Steve Mnuchin's firm, Liberty Strategic Capital, alongside others. Mnuchin said that he believes the struggling lender now has enough capital. The news comes after the Securities and Exchange Commission Chair Gary Gensler called for greater transparency from banks.
In the role I'm in, I'm not going to comment on any one registrant or filer, but many banks are public companies. Those banks need to make sure that they make full, fair, and truthful disclosures to the public so that the public can make their investment decisions.
SEC Chair Gary Gensler speaking there. NYCB also named Joseph Otting, the former controller of the currency, as its new chief executive officer.
The European Central Bank is expected to hold interest rates at a record high at its meeting today. While price rises continue to cool in the euro area, officials are focused on wages, which are still advancing at more than double the ECB's 2% inflation target. Bloomberg's Max Ramsey has more from Frankfurt.
The market is positioned for interest rates to stay on hold today, keeping the deposit rate at its record high of 4%. That's been widely telegraphed by members of the ECB's Governing Council. But of course, the press conference from President Christine Lagarde will still be closely watched. We'll be on the lookout for any signals on the potential timing of a first cut. We'll also get new quarterly economic projections at this meeting, so we'll see how that plays in to the ECB's thinking. In Frankfurt, Max Ramsey, Bloomberg Radio.
The US military says that 3 people have died in a missile strike on a commercial ship in the Gulf of Aden. They are the first crew members killed since Houthi militants started attacking container vessels in one of the world's busiest sea lanes. The Houthis say that they will keep targeting ships linked to Israel, the US and UK in the region until Israel, quote, and its aggression in Gaza ends. Many commercial vessels are avoiding the region due to the instability.
Deutsche Bank has cut bonuses by more than 10% in its investment banking division after a slump in deals and slowdown in trading. The German lender's bonus pool was down by around 5% overall, with merger and acquisition advisors facing some of the harshest cuts, according to sources that spoke with Bloomberg. James van Moltke warned in January that variable pay for last year would reflect performance and the difficult market for the investment bank. Revenue declined by 9% last year, driven by a 38% drop in the advisory business and an 11% fall in trading revenue. Well, in a moment we'll get more on the business reaction to the budget, plus the mooted changes to regulation of Wall Street banks. Another story that caught our eye this morning. A look inside Apple's decision to shut down its Apple car program, $1 billion a year into a car that it never built. This is an inside story of how that decision came about in Apple. Are reporting looking at sort of how the company decided to make a decision to scrap this project. Yeah,
look, it's an eye-watering sum because actually the $1 billion a year is only the start of what Apple put into this. Now, this is a deep dive. It's part of our big take this morning. It's also in Bloomberg Business Week. It's by Mark Gurman and Drake Bennett. I mean, Mark has broken so many of the major Apple stories. But this includes the fact that I hadn't understood that way back when Apple could have and thought about even buying Tesla. It even thought about buying one of the other old school car makers in Detroit, back when there was the sort of virtual collapse of the big Detroit car makers, but decided against. But their conclusion, which I think is quite interesting, and perhaps the whole point of this is, that it's a story about the indecision of Apple when it comes to, trying to create this car, or perhaps buy a business, a bolt-on acquisition that could have created the vision of an Apple car.
Yeah, really interesting story. It's today's Bloomberg Big Take, how Apple sank about $1 billion a year into a car that it never built. Worth a read if you've got time this morning.
Now, shares in UK financial services companies rose yesterday on Wednesday after Jeremy Hunt announced the creation of a British ISA, which will give savers an additional £5,000 tax-free allowance to invest in UK stocks. not everyone was impressed. Dan Mokzuski, who is the UK Managing Director at the retail trading platform eToro, he warned against the risk of investing in low-yielding UK companies to avoid taxes on the returns from those investments. Joining us now to sift through what it all means for UK companies is our business reporter, Saba Meddings. Saba, good morning. How has this been received then? Is it even going to move the needle when it comes to the depth of UK capital markets issues that we have?
Good morning. Thank you. I mean, first of all, I would say it's pretty light on details. They're going to consult, but it's only going to be people with more than £20,000 saved that will actually be able to benefit, likely. That means 1.6 million people in the UK maxed out their ISA allowance in the latest figures, which were for 2021. So they are sort of quite slim numbers. Another thing would be sort of how do you decide what are UK equities? Will funds be allowed to invest? So there's not quite enough detail yet to know the full impact.
Sabah, ahead of the budget, the Treasury had also announced that it would require pension funds to publicly disclose how much they invest in UK businesses. What more did we learn about this?
Again, it was kind of perhaps less than we thought. I mean, there was more stick than carrot. He did say that, DC and local government pension funds would have to say how much they invest. They'll need to disclose their net returns, helping people make a better comparison between various funds. But yeah, it was definitely perhaps not as much as people expected. And again, more stick than carrot.
Hunt also announced the effective end of the non-dom regime. So that's set to come into effect in April 2025, sort of taking a Labour policy, saying that it was actually originally a Conservative one or trying to pass it off that way. How important is that, the non-domiciled tax regime?
Well, that means that we should expect an extra 2.7 billion in tax by 2028. What we don't know is how much people will bring back to the UK. There's various kind of softer landing. They can sort of bring some money back and pay a lower tax rate on that. So we don't know how much they might bring. And obviously, if they did, that would give more money to sort of invest and spend in the UK. But yeah, I mean, from year 5, people will need to pay tax in the UK non-doms. So it is going to have a large impact.
What about more broadly, Sabah, the business reaction to the budget?
I mean, I can't say anything more exciting than quite underwhelming. I think, business obviously got a great boost in the autumn statement. And yesterday, there certainly hasn't been the same kind of responses from business. They're sort of saying, there are a few things to help small businesses. Siobhan Haviland at the BCC said it was always going to deliver less for business. There is help on childcare, which obviously indirectly helps business, and the CBI has welcomed that. But aside from things like the alcohol duty, there wasn't any help for the hospitality, pubs and restaurants, and they've been causing quite a clamour on that.
Yeah, absolutely. Sabah, thank you so much for being with us and helping us to sift through then the reaction to Jeremy Hunt's budget. I mean, underwhelming on one hand, or just sort of making the best of a bad hand. At least it was steady. Those seem to be the sort of reactions this morning. Sabah Meddings is our business reporter here in London.
Turning to Wall Street, banks on the cusp of sweeping regulatory victory after Jerome Powell signalled officials will scale back plans to make them hold more capital. The Fed chair told a panel in Congress that he's in no rush to lower rates, though doing so will probably be appropriate at some point this year. Bloomberg Kriti Gupta is with us for more on this. Morning to you, Kriti. So Powell's intervention on banking regulation looks pretty significant. The Fed had looked to be pretty intractable on this issue before.
They did. And look, I think the context is everything here. In the last 12 months, I want to say it's been a little over 12 months here, but 12 months ago, we were talking about a potential repeat of the global financial crisis. That was the narrative in the markets coming off of the Silicon Valley Bank stress. So you did see this idea that maybe the capital buffers needed to be bigger and stronger. And this was also coming at a time when the markets were kind of going haywire, which meant that trading profits were really increasing. Remember, some of these big banks make a lot of money when there is volatility because at the end of the day, they are market makers. So they actually benefit from some of the chaos that you see in the markets. On top of that, they are increasingly leveraged as well. So that on top of these cracks you were seeing on Silicon Valley Bank and concerned about whether or not that would be the first of a wider domino effect, we're all kind of leading to this idea that we are going to do everything in our power to stop a global financial crisis 2.0. That is not the case anymore because it's quite clear that, one, the Silicon Valley Bank story was not as widespread and the regional banking crisis was not as widespread as initially thought. Two, the capital buffers have actually been helping a lot of these banks stay afloat and are doing so in a way that it doesn't indicate that more are needed. And three, American resilience, specifically from the consumer, but also in terms of being able to pay back some of the loans that a lot of these banks are exposed to. Think about mortgages, think about auto loans, for example, even student debt. They're actually making the returns. There aren't cracks here. Delinquencies are actually lower than they have been in ages. Some of that is kind of the hangover from the stimulus, but some of that is just showing that banks are kind of doing okay right now.
Yeah, okay, that's the positive side. But hang on a second. Jamie Dimon and Wall Street CEOs have been lobbying incredibly hard on this, warning that it would put US banks at a disadvantage compared to their European rivals. I mean, is there not sort of detecting a bit of lobbying influence too?
Oh, absolutely. And it's interesting because even the lobbyists were quite surprised at the 180 that Jay Powell had taken. And you're right, I did just give you the full positive story. The other side of this really comes down to the leverage issue. And that's where a lot of this is so different. Remember, the more leveraged you are, the more risks you can take, and in theory, the more benefits you can accrue. And that trade has been going to the benefit of a lot of these U.S. banks. It can also very quickly go sideways if you start to see cracks emerge, if that recessionary narrative takes on a bigger hold. But Jamie Dimon is right in advocating for his own bank, and that the more leverage you want and the more that you can invest, the more return that you can get, as opposed to just kind of holding it steady. And the way that this initial plan was going to work was that if there is some sort of bailout that's necessary, the bigger banks pay kind of a prorated amount to this fund that ultimately, should they need it, bails out smaller banks. Jamie Dimon will, of course, be taking the brunt of that hit.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.